Hello everyone, I am Teacher Ampy and we were going to study basic accounting. What can you say about the picture? Yes, very good. It is just an open commercial space. What do you have in mind upon seeing this picture? Or should I say, what can you see in the picture? What are the other things that you can see in the picture? Yes. What about what could you put in that picture? Yes. It's still a vacant commercial space, right? But do you have any idea about what you want to put in the business? Alright. All of your answers are correct. Your answers may vary. Yes, everything that you want to put in the business or in that picture are all correct. But then, what's inside in that picture is what we're going to do and study right now. We're going to study accounting basic. What is accounting? Anybody? Very good. We define accounting as a systematic process of the letters IRMC, which are identifying, recording, measuring, classifying. Don't forget IRMC. On the other side, we have VSIC. What are those? Verifying, summarizing, interpreting, communicating. Is it difficult to remember? Just remember the 8 letters and you knew very well. The next slide. The accounting equation. The basic accounting equation, also called the balance sheet equation, represents the relationship between the assets, liabilities, and owner's equity of a business. Again, it represents the relationship between the assets, liabilities, and owner's equity of a business. It is the foundation for the double entry bookkeeping system. For each transaction, the double debits or the total debits equal the total credits. For each transaction, the total debits equals the total credits, and it can be expressed as here, assets equals liabilities plus owner's equity, or the now we move on. What are liabilities? Liabilities are those items which are owed by the business to entities or bodies outside of the business. Examples of liabilities are loans to banks, creditors, money owed. We have sundry creditors, bank overdraft or cash credit, as we mentioned before, unclaimed dividends, received income, sales tax payable, income tax payable, provisions, other taxes payable, and now let's move on. What are owner's equity? The simplest way to understand the accounting equation is to understand what makes up owner's equity. By rearranging the accounting equation, you can see that owner's equity is made of assets and liabilities. Owner's equity Owner's equity can also be expressed as owner's equity equals capital invested by the owner plus profits or losses to date, also known as retained earnings. Rearranging the equation again, therefore, it can be, yes, total assets minus total liabilities equals capital plus retained earnings. Again, total assets. Owner's equity can also be expressed as owner's equity, yes, same. Capital invested by owners plus profit losses to date, also known as retained earnings. Now we move on. What again? Equity. What is an equity? Anybody? Next. In a business, equity is composed of four parts that either increase or decrease equity. We have capital, what the owner puts into the business. In the picture, what we want to put. Revenues, what the company receives for sales. And the last one. Now let's have the illustration. We have the situation or transaction, assets invested by the owner. On May 1 or May 1st, Alpha Omega started a delivery service. The following transactions occurred during the month of May. He invested 800,000 cash and cars amounting to 200,000. Therefore, we have this equation, assets equals liabilities plus owner's equity. We have the cash of 800,000, cars of 200,000, and Alpha Omega capital of 1 million. Clear? Now let's have this another transaction just to prove the accounting equation. Borrowings from the bank. Okay, May 2. Alpha Omega borrowed 100,000 cash from Pongpagong Bank for use in his business. Again, to show the illustration, assets on the first column equals to liabilities plus owner's equity. So how would we represent? Cash increased from 800,000 to 900,000, and then we have the cars 200,000. We have loans. Clear? Now how about we purchase assets for cash? Something that we want to put in the picture. May 7. Bought tables and chairs from Orocan and paid 45,000 cash. Again, we have the illustration. Assets equals liabilities plus owner's equity. So we have cash of 855,000, cars of 200,000, and loans payable of 100,000, Omega capital 1 million. Okay? Just always remember that we have a balance equation, balance accounting equation. Asset purchase on account, that's it. Borrowed equipment were purchased on account from portion for 55,000. That is already reflected. Yes. Can you do it? Anybody? Okay, here. Accounts payable increased 55,000. Yes. Okay. Cash 855. Car of 200,000. Furniture. Any question? Okay, because you're going to do the T account. Now let's have bookkeeping. What do you have in mind? The use of debits and credits in double entry bookkeeping can be traced back many centuries. About the definition of the topics or the terms, accounting terms being explained to you. Do you have any questions?
Created using Powtoon.
Again,